But thank you so much for joining us again. We're just going to wait for a few more minutes, probably a minute or two, just to make sure that we have a couple of more people who've logged in. But we have here again with us today, Grace Taylor.
Hi, everyone.
So yeah, we're just going to wait for another minute or two before we start. But feel free to keep your questions in. We do have Jessica online on the YouTube, so she's going to be moderating the chat as well. We're really looking forward to this webinar. But I think I should just go and introduce you, Grace, while we wait for people to turn up. So I'm from India, part of the community team here, and Grace joins us from Ireland. Thank you once again for hosting the webinar. So she's enrolled agent. She's an IRS certified US tax credential and the owner of Gracefully Expat LLC. It is a US tax practice that focuses on digital nomad entrepreneurs and freelancers. So following a nearly 10-year career in the Big Four, she opened up her own business to work with individuals in 2017. So Grace will be covering the basics that freelancers from all countries need to know about reporting their income, tracking their expenses, and generally managing the tax obligations and personal finances. And just to remind everyone, we will have a few minutes in the end for Grace to answer a couple of questions. So you can ask them in the chat box as they come up, and Jessica, our other community manager, she's there to keep track. And please be sure to keep things topical and appropriate in the chat. But I think we're on time, so we can get started. Grace, over to you.
Great, thanks, Pratima. And hi, everyone in the Reedsy network. I'm super excited to be here today and just talk to you about some general tax and finance tips for freelancers. And as Pratima said, I'm coming to you today from Dublin, Ireland, but I'm not Irish myself. And while I practice US tax, I'm not American either. I'm actually Canadian. So I've had just a little bit of exposure to a few different countries' tax systems. And as well, in my professional practice, I work with people who are based all around the world and are primarily freelancers or entrepreneurs or in some way, shape, or form self-employed. So while my own professional credential is US specific, and I really can't go into the specifics of any other country today, I just do have that bit of background in terms of a bit more of a global perspective. Right, so if we could go to the slides now, please. Thanks very much. So the topic today is just general tax and finance tips. So just again, a bit about myself, and as well, I always like to give a disclaimer that this is not tax advice in any way, shape, or form. It's for general informational purposes only. And if you need specific advice, you are strongly encouraged to seek out your own independent advice. So what I want to talk about today is, when I thought about this topic, I thought kind of from the very beginning to think about what is a freelancer and how does that differ from being a regular sort of salaried employee? And then from there, I'm an accountant myself, so I always like to start with the top line. How do we track your income? The next step there logically would be, what do you do about your business expenses, if any? And then finally, reporting your taxes. What might that look like in a few different countries? And I have a few country-specific examples. And then as well, one thing I always do like to just suggest that people consider if they haven't yet is, once upon a time, I suppose more people would have worked for companies and had something like a company pension. That's really not the case anymore. And we're kind of on our own in terms of planning for retirement. So that's just something that I like to encourage people that it's not too scary. It is within your grasp to kind of start to get your arms around and start planning for it if you haven't yet. Right, so let's get started. What is a freelancer and why is it important and what's different to being a regular employee? So this definition does differ from country to country, but in general, someone who is an employee would be on payroll. They would importantly have tax withheld at source from each of their paychecks. And normally, they work for one company. That company tells them kind of what to do every day. They kind of just, wake up in the morning. Nowadays, they just wake up and log into their computer. I suppose no one's going into an office, but the company kind of directs their schedule. Contrast that with someone who is a freelancer or self-employed. That person might invoice individually by project or for their time. They might have multiple clients that they work with. Importantly, they're responsible for their own tax reporting. We'll talk a little more about what exactly that means. And they would direct their own schedule as well. So for many countries, their tax departments look at that person a little bit like a business of one. And I just threw out a few different terms here that all basically mean the same thing. Sometimes you'll hear a sole proprietor. That really is just an accounting word for someone who doesn't have any type of formal business structure. Freelancer, self-employed. Sole trader was one that I hadn't come across until I started spending more of my time here in Ireland, and I believe that terminology is used in the UK as well. At first I thought, that must mean you're trading something. I'm not trading anything, I'm just working for myself, but no, it just means self-employed. In a US perspective, oftentimes you might hear the word independent contractor. Again, it all just means self-employed. And sort of, I think about it as when you are a freelancer, you do have that ability to kind of dial up your income. That's, your friends and counterparts who are just working on a set salary, they don't really have that ability. You can take on more clients, more projects, but you also have the responsibility that comes with that to really take an active role in managing your taxes and your personal finances. So I do encourage people to kind of think of themselves as a business of one, and everything that entails from cash flow management, budgeting, expense tracking. These all needs to be things that you are comfortable with and you're somewhat familiar with. And so sort of the next step from there would be generally tracking your income and understanding what's reported on your behalf to the revenue in your country. And believe it or not, this is a question that I sometimes, my clients might ask me is, well, how do I find out exactly how much I made last year? And the reason why they might not know is perhaps they have different clients who pay them through different sources. One comes from TransferWise, one comes from PayPal, one comes from a direct, bank transfer directly into their bank account, perhaps in different currencies. And so it really can be a bit of a challenge to figure out exactly how much you did make and how much you need to report to the revenue. In some countries, you might get a tax slip. It's called the 1099 miscellaneous in a US context. And basically what that is it's the income that was reported on your behalf to the revenue agency in your country. So you know how much to report on your taxes, because from a US perspective, if you got a 1099 from a client that says, right, we paid you $20,000 last year, and you only report on your tax return $10,000, well, there's obviously going to be a mismatch with the IRS. So it's important to know if anything's being reported on your behalf and how is it being done. And then finally, a suggestion that I have just for some of my clients, especially if they are finding it quite overwhelming when they have business and personal expenses and incomings and outgoings, is they might consider setting up a separate bank account just for their freelancing income and, importantly, expenses. So that's just something to consider. Now, in my line of work, because I do deal with, digital nomads, expats, people who are all over the world, and many of yourselves might have faced this as well. Sometimes you are invoicing clients in different currencies. But of course, whenever you're tracking your own freelancing income and expenses, and importantly for reporting for your taxes at the end of the year, it probably all needs to be converted back into your base currency. And then you're looking at kind of what do I do in terms of exchange rates? Well, first of all, my biggest advice is be consistent with your exchange rates. Don't choose them arbitrarily. If the revenue in your country has some guidance, I suggest that you look it up and follow it, and keep documentation of which rate you did use. So whether it was the spot rate that day, I like to use a site called xe.com, or oanda.com is also pretty good. And then you can just keep a link and just so you remember, why did I choose that rate? Or other times it might be appropriate to use an average rate for the year. The IRS, for example, publishes yearly average rates. So again, check with the revenue in your country to see if there is any guidance, and do keep your own documentation so you can remember why you chose that rate. So kind of the next thing that flows logically from there, again, to my accountant's mind, is once you have your top line gross income, then you're looking at, were there any deductible business expenses? And depending on exactly the nature of your freelancing income, there might not be an awful lot of these, but if you do have them and they are allowed to be deducted, then it's in your interest to make sure that's done correctly. So this is a question that I often get is, how do I know what's deductible? At a very high level, and this is probably true in most jurisdictions, expenses, if they are necessary for you to generate your income, and that expense was primarily and exclusively used for business purposes, it's probably deductible. For example, this is again from a particularly US perspective, but sometimes people ask me, oh, well, I bought that nice suit to go to a client meeting. Is that allowed as a business expense? The IRS says no. And the reason is because they reckon that you can get use out of that suit elsewhere in your life. It's not specifically just for business. But if you had to buy some type of uniform for your work, then that uniform that you really can't use outside of a business context, that would probably be allowable. That's just an example there. And then what I did was, now this is going to look like an awfully Anglo-centric selection of countries. That's not an accident. I didn't feel confident in looking up the revenue rules in Spanish or French or another language. But I do suspect that most countries do look at these concepts in a pretty similar way. But what I did was I just looked up how does the IRS define business expenses. This is information that's available to anyone. The key words from a US perspective are the expenses being ordinary and necessary. From a UK perspective, the HMRC, they do publish a guidelines for self-employed individuals as well. And they just give some examples of what might be deductible: office costs, travel costs, training, marketing. From a Canadian perspective, the CRA just reminds people again that personal expenses are not deductible, which is fair enough. And then the Australian tax office, they say that most expenses that are directly related to earning that income are allowable. So as you can see, the revenues from these various countries, they actually do shy away from giving you an itemized line by line of these are the deductible expenses, because it does differ so widely based on what business you're in. So a lot of it is up to you to be proactive, to look it up or to seek guidance if you're not sure. And then as well to keep proper records and documentation. So that's often another question that I get is, well, how can I track these expenses? An awful lot of people can do just fine by keeping some type of spreadsheet. You can use a software program. There's various ones that are available online. But I just caution people that if you're going to use the program, you have to use it consistently, and the results are only as good as your input is. So if you are just kind of expecting some kind of set it and forget it solution, unfortunately, it just doesn't work that way. Especially if you're, maybe using a credit card that you buy yourself, your daily coffee with, but that you're also using for business expenses. The software can't tell what is an expense for business and what isn't. So you do have to do some of your own inputs as well. And then in terms of record keeping, I would suggest just check with your country's tax authority. But in most cases, because we're really not getting very many physical paper receipts nowadays, in most cases, electronic copies of invoices and receipts will be sufficient. So once you have your gross income, you know what your business expenses were, you have your net, what we call your net taxable income, then you're ready to go and report your taxes to the country that you live in. But are there any sort of specific pitfalls or specific tips that self-employed individuals need to know? Oftentimes the answer is yes. And in general, you can assume that your tax reporting is going to be that bit more complicated than that of your counterparts and your friends who just have a W-2 or a salaried job. So some of the things that I just identified that were kind of common across different countries. Check if you need to register as self-employed with the tax office in your country. Check if you need to file a different tax form, or indeed file a tax return in general. If you worked for a salaried company, you might not need to. And then find out if you need to prepay your tax in pay-as-you-go or installments or quarterly estimates, or there's different terminologies for basically the same thing, which is pay in your tax in the same quarter that you earned it. And again, I chose my 4 sample countries here from the Anglosphere, but just as a bit of a comparison for what would be required across a few sample jurisdictions. So from a US perspective, you don't have to do any special registration with the IRS if you're self-employed. But when you file your tax return, you do need to include Schedule C, and that triggers the potential self-employment tax. And then you do also, it is highly suggested that you pay your self-employment tax and your tax in quarterly installments throughout the year. The reason is because if you think about it logically, why would these quarterly estimated payments even be relevant? Well, it's because whenever you are an employee, you're obviously having tax withheld at source. Whereas when you're self-employed, the revenue office don't know how much you're earning, and they just don't have access to those tax withholdings as soon as they would have if you were on payroll. And of course, they want their hands on that money. So they generally have some type of mechanism by which if you don't pay in quarterly installments, you can be subject to, in the US, it's called underpayment penalties. And I assume there are similar provisions in most other countries as well. So from a UK and indeed from an Irish perspective, you actually do need to register as self-employed with the Revenue Office. It's pretty easy. I've done it here in Ireland. And there is a separate tax form from a UK perspective. You file as a self-assessed individual. It's the same in Ireland as well. In Ireland, most people who just have one job from a company, they don't need to file a tax return. But if they're self-employed, they do. And you are required to prepay your tax. Then in Canada as well, you don't need to specially register. There's no special tax form. And again, you are strongly encouraged, stroke required to prepay your taxes. And then the same in Australia. There is a special business schedule that's required. And then you do prepay your taxes in what they call pay-as-you-go. The last section, I was just talking about, in general, what are retirement savings options that you might want to think about. And I talked about it from a few different countries' perspectives. So again, I'm sorry if you heard this or if you didn't, but when I would think about retirement savings, I think about it from kind of 3 pillars. You've got your government pension or Social Security, whatever you're entitled to in the country that you live and work in. You've got potentially tax-advantaged accounts that we'll talk about those in a minute. And then kind of the third would be if you do have additional ability to save and invest, you can do that kind of outside of the tax-advantaged accounts. But I suggest that people look at the tax-advantaged schemes first. So again, just to kind of summarize that, how do your self-employment tax contributions factor into your potential benefits from the state pension in your country? What tax advantage schemes are available for self-employed workers in your country, because they might differ from the ones available to your friends and counterparts that have a salaried employment. And then if you do have additional funds, you can look at other savings and investment vehicles. But I just looked at what's available for kind of the 4 countries that I looked up for the purposes of this exercise. And, from a US perspective, that's, again, the one that I'm the most familiar with. You can check your Social Security contributions on MySSA. It's a really good site. I really suggest that you check it out if you haven't. And then you can save in tax advantage schemes such as IRAs. If you are self-employed, you can, in addition to your regular IRA, you can set up a SEP IRA or a solo 401k. So you can't have both at once. Some people don't know that, but you can. And then you could also look at HSAs, which are health savings accounts, but a lot of people use them for general retirement savings as well. And they are from pre-tax funds. Very similar, in the UK, you can check your national insurance contributions on the government website. And then the tax advantage schemes that are available there would be, from what I looked up anyways, you have ISAs, and then you can also look at personal pensions. It's similar in Ireland. You can get a personal pension when you are self-employed here. In Canada, once again, no surprise, you can look up your Canada Pension Plan contributions on the My Service Canada website. And then the accounts that most Canadians will be familiar with are called RRSPs and TFSAs. And then in Australia, once again, same, you can look up your pension estimated benefits on the Service Australia website. And the tax advantage scheme in Australia is, if you're Australian, you'll know this, it's called a superannuation. And I had a quick look, and it is available to self-employed individuals as well. So I wanted to kind of finish off with just leaving you high-level action items, and then we'll go to questions. From an income perspective, main point I just want to leave you with is have a system in place to track your income and understand what is being reported on your behalf to the revenue regarding your expenses. Understand what's deductible in your country and have a system in place to track your expenses and keep records. For your taxes, understand if you need to register as self-employed, understand if you need to prepay installment payments or quarterly estimated payments, and then make sure and actually file your tax return by the deadline each year. And then for retirement, planning ahead, looking to the future, I really just encourage you, understand what options are available to you. And then if it seems confusing, do reach out to someone for more information. Even if you just, contact someone at, whatever bank or financial institution that you use, they might be able to point you in the right direction for how do I actually set up a personal pension. Once you know the right terminology to use, that can kind of get you on the right path forward. So thank you for the time today. It was really a pleasure. Sorry about the technical difficulties, and you're welcome to contact me on any of the social medias. I'm at Gracefully Expat everywhere. And yeah, I'm looking forward to taking questions. Do we have questions?
Yeah, so we did get a few of them before, while we were talking, and Jessica managed to kind of save some of them here.
Good.
Yeah, so I think we can't really scroll back completely. Yes, we can actually.
Right.
So I think one of the first important questions that someone asked was, if you have clients in 2 or more countries, do you have to report taxes to both respective countries?
That's a really good question, and I can't speak to the tax rules in every country, but what I can say is generally no. Generally, when it comes to sourcing your income, most countries follow it's sourced to where you're a resident and where you're actually performing that work. So for example, I live in Ireland and I have clients from all over the world, but I'm doing my work in Ireland. So I report all of my taxes to the Irish Revenue. And it's the same from a US perspective. If you live in the US, you report everything to the IRS. Where it can get a little bit complicated would be if you are very mobile and you spend maybe 6 months in the UK and 6 months in the US, then there's a very good chance that you actually might have to report to both countries. And that would be a situation where I would really suggest that you seek out some tax advice from both of the countries that you potentially have a reporting in. But at a high level, just having a client, if I have a client in France, but I'm doing the work from Ireland, I'm still only reporting in Ireland. That's the general rule.
Another good question that someone asked earlier was, if you travel very frequently and you're traveling full time, you don't have a significant amount of time in another country, would you still pay US taxes because that's your home base, even if your clients live all over the world?
Is this person coming from a US perspective, or?
Yes, I think they're from the US perspective.
When it comes to US, everything depends on where you're a citizen of. If you're a US citizen, you are always reporting 100% of your worldwide income on the US, your tax return. That's just a virtue of having US citizenship. That's the rule. If you are not a US citizen, then it comes down to your residency status. And to calculate your residency status, we actually have to look at the number of days that you've been in the US versus outside of the US, do a bit of a calculation. If you're considered US resident, even if you're not a citizen, you do report worldwide income during your US residency period. But if you are not a US resident, then you only report US source income. So that's a high level, but it can get complicated quickly. But at a really high level, understand that as a citizen, you're always reporting worldwide income. And as anybody else, you're looking at, first and foremost, what is my residency status for tax purposes?
I think Lisa Davis had a really good question. If you look at the chat on the right, she's asking about, advice on retirement. Because if you move countries every few years and you don't know where you're going to retire, how would you advise someone for that?
That is such a good question. And it's something that I have thought about a lot for myself as well. So a couple things on that. I do suggest that those of us who do move frequently, we have to do a little bit more of our own kind of tracking and legwork. So I lived in the US for a while and I paid into US Social Security. So I'm keeping an eye on what am I going to be eligible for from a US Social Security perspective, even if I happen to retire back in Canada or here in Ireland or elsewhere. So I think number one is have a system in place to track what you've paid into in these other country systems. Number two is be aware that a lot of the US, Canada, Australia, Western Europe, most of the sort of developed countries, if you will, they have what's called a totalization agreement with each other. And it basically means that if I pay into the Canadian system, but I'm actually end up retiring in the US, they can combine those credits and basically so that I'm not, I only paid in, 5 years here, 5 years there, 5 years somewhere else. If my total combined credits from all totalized countries that I've worked in exceed the threshold, the minimum threshold, then I'm still eligible. So have a look at whether the countries that you have lived and worked in do have these Social Security totalization agreements.
Yes, someone asked about the LLC. So at what point should one consider reporting as an LLC? And something to follow up with that was someone also asked, is which one is better? Do you think reporting as an individual is better, or is it a good thing to consider creating a business entity?
Yeah, really good question. I'm going to answer this from a US perspective because I just don't know the ins and outs from a UK perspective. Normally, when we're talking about LLCs, we're talking about US LLCs. So high level is when you have a single member LLC in the US and you don't elect any other tax status, such as an S Corp, then the LLC is what's called a disregarded entity. So it's a tax nothing. It doesn't do anything for your taxes. And in that case, you have your LLC, but you act like it doesn't exist and you report your income and expenses on your Schedule C, just like you didn't have the LLC. So the question is, why do I have it? Some people have it for separation of liability. So the operating through the LLC can allow you for legal reasons to basically limit your liability to only your business income. If there were ever any kind of legal action, the idea is they couldn't go after your personal assets. I don't really speak to any kind of legal implications because I'm not an attorney, but that's one aspect of having an LLC that people are interested in sometimes. And then the other thing is it can just be it kind of gives your business, your self-employment activity, that air of maybe more professionalism. But from a tax perspective, the single member LLC doesn't change anything at all. You're still self-employed and you still report everything on Schedule C. If you are thinking about having an S Corp, you can have an LLC that elects to be taxed as an S Corp. That's something that you should really talk to someone about because it does change things from a tax perspective. So kind of at a high level, that's my suggestion there.
I think two small questions came in right at the beginning was do clients know to give you a 1099 or is it your responsibility to reach out and ask for them?
Good question. So it's your client's responsibility to issue you 1099s. They actually can be subject to penalties if they don't. A lot of people don't know this, and I think a lot of people file 1099s late or not at all. But they're supposed to. If they pay you more than $600, this is from, again, a US perspective. Sorry, everybody else. It's their responsibility to issue you 1099s. But, that's a big but, is it's still your responsibility to report your income 100% fully and completely. Whether they issue you a 1099, it's really up to them, and the risk is only on them. So that's why I really suggest to people, independently track your income as well. If they issue you a 1099, fine. But it really, from your perspective, if you've been tracking your income properly, it shouldn't make a difference because you were already going to report that $5,000, whether they sent you the 1099 or not. So that's my suggestion there is have your own independent system, accept the 1099s when they come. If you want to be nice to them, you can ask them to send it to you. But again, the risk is not on you, it's on them because it's the person who's making the payment has the obligation to issue the 1099.
Now that's definitely useful, especially when some of our freelancers are working with international clients. Most countries don't recognize what a 1099 is. I didn't know about it until I moved to the US. So it's really important to know that you have to be able to report your own income. But I think that's pretty much, we've kind of run equally around the time. We can probably stop now if that's okay with you, Grace.
Oh yeah, I just saw Rachel had a question there. Oh. You're not Rachel, because she asked, is it gonna harm the person who was paying you? It's not, because you're not going to the IRS and saying, hey, they should have sent me a 1099, but they didn't. Because the fact is, whether they sent you that 1099 or whether somebody just paid you with an envelope full of cash, it's still income to you and you're still obligated to report it as such. So that's kind of, in a general rule, the way I think about it is I look at all my 1099s that I received throughout the year and I add those up. And then I better make sure and report at least that amount on my Schedule C. Because if I don't, the IRS is going, wait a minute, where's that income? But if I had additional income that was not on 1099s, that needs to be added to it as well. So that's why it's, you can't just be sort of passive and wait for those 1099s to come in. I really do suggest track your income throughout the year so that you know exactly what that gross income number needs to be.
I think that's pretty much it for today. Martin, if you can put me back on the screen, please. But while that happens, thank you, Martin.
My bad.
No, we can all be on the screen. That's absolutely fine. But no, thank you. I think that's our time for today. Thank you so much, Grace, for kind of doing this twice with us, and for everyone online, patiently waiting for 2 technical glitches and hiccups or disasters or whatever you may call them that we had. But that was very useful information and very useful tips on how we can better manage our finances. I mean, I learned more, but how I can do things in India as well.
I'm glad to hear it. Thank you. It was
pretty useful, especially I'm going to talk to my accountant more about it.
Good.
And thank you all for joining from all across the world. And if you're not a Reedsy freelancer yet and would like more information on how to become one, please send an email to freelancer@reedsy.com. Jessica is going to put that email ID on the chat as well, so you can have a look at it. But for everyone else around the world, thank you so much for joining us, and goodbye.